Good evening, everybody. Just as participants are joining our webinar tonight, we're going to be looking at farm tenancies, biodiversity net gain, and carbon credits, all very interesting and topical issues at the moment. And we know that many of our members have been asking lots of questions about this topic, and we will have a really good time tonight looking at some of those issues. You would have expected to have seen our national chairman, Mark Coolman, in the chair tonight, but he is having internet problems. I'm hoping that he will be able to join us a bit later. So I'm afraid you've ended up with me. I'm George Dunn. I'm the Chief Executive of the Tenant Farmers Association, and you are extremely welcome to our special seminar tonight. And tonight we have three speakers for you. Starting off in a moment, we will have Linda Davey from GRP Insurance Group, with whom the TFA has got an affiliation. And Linda's going to be giving us just a 5-minute talk about insurance premiums and insurance claims and how the affiliation that we have with GRP can work for you. And then we're delighted to have two really high-profile and important guest speakers in this important area of biodiversity net gain and carbon credits. So we've got Charles Callop, who is a visiting professor at Harper Adams and also part of the Natural Capital Consortium, and Philip Mead, who's one of our very own recommended professionals from Davis Mead Property Consultants, who will be looking specifically at some of the landlord-tenant aspects. Now, tonight there is a heck of a lot of information that we want to get across to you. It's a topic about which not many of us have a great deal of knowledge. So there may not be a lot of time for questions at the end of the webinar, but what we are going to do is to harvest any questions that you have, and please put them in the Q&A that you can see at the bottom of your screen. And we will pick some of those up as we go through, but we'll harvest most of the questions and we'll try and answer them after the webinar to give both Philip and Charles sufficient time to give us the information that they need and to make sure that we are fully briefed on these important topic areas. So without further ado, what I'm going to do now is to welcome Linda Davey from GRP, and she is going to just give us 5 minutes on the GRP insurance affiliation with the TFA and how that can benefit you. So thank you very much, Linda. Over to you.
Hi, good evening, everyone, and thank you, George. It's just a quick slot from me tonight. My name's Linda Davey. I work for Marshall Waldrich, which is part of the GRP group. We specialise in farm and agriculture insurance, and I just wanted to share with you tonight a little snippet of the claims side of things. My experience in my sort of 30 years of dealing with agricultural insurance, I defected to the dark side for 13 years as a loss adjuster. So I do have 13 years of direct claims experience. So any examples I give you tonight have been drawn from my personal experiences. I'm just going to have to fly through a couple of issues. Firstly, GPS equipment. I know not all of you have it, but where you do have GPS equipment, you have two choices as to how you insure that equipment. You can either include it in the tractor or agricultural machine it's in and allow the value to compensate for that equipment, or you can insure it separately under the farm policy under the all risk section. Now, it's usually a little bit cheaper to insure it under the agricultural vehicle policy in a tractor, allowing for its value. But the problem comes if you remove it. If you either remove it to take indoors for security, we're actually aware that Humberside Police have been advising farmers due to a recent spate of thefts of GPS equipment to take their equipment indoors on a night. And that's great advice. However, it could leave you totally uninsured for that equipment once it's removed from the vehicle. Equally, if you swap it between agricultural machines, just make sure that either the machine you put it in has also got the facility in its value to account for that value of GPS equipment, or again, you insure it under the farm policy as a standalone piece of equipment that's insured for any accidental loss or damage wherever it is, whether it's inside the house or in the farmyard or in the tractor. So just be aware of that. We will be seeing problems with that if people are going to have to remove the GPS equipment from their vehicles. So that's just a quick recap on GPS equipment. The next little topic is public liability claims. You need to be aware of your exposure to public liability litigation. You're not always in control of who or how you're going to get sued, but you can do some things to try and ward off or mitigate any claims that come your way. For example, you might not think that you could get drawn into any sort of litigation for injury to members of the public. You might feel that you've done everything you possibly can, but I'll just give you a quick example of a claim that we dealt with where the farmer wanted some roof repairs doing to his shed. So he employed, well, he didn't actually employ them, they're an outside contractor specialising in building repairs. And he asked them for a quote. They gave him a quote. He was happy with that. So he said, yeah, fine, you just get on and do whatever you have to do. So the company came along, started the repair work on the roof, and one of the employees of the roofing contractor fell through the roof and very badly injured himself on the floor below. Now, you would think that the farmer wouldn't have any responsibility for that whatsoever. However, it ended up in court, and the court decided that Mr. Roofing Contractor was 75% responsible for his employees' injuries because he'd failed to put nets on the inside of the roof to prevent a fall. But the judge said, in his wisdom, you, Mr. Farmer, are actually 25% for this 25% responsible for this accident happening, because you didn't have any signs up on your building saying there was a fragile roof. So it's quite shocking sometimes, and that's just one example of how you could get drawn into situations where you think you've got absolutely no responsibility. And when someone's badly injured, nobody cares. These sort of no-win, no-fee solicitors or anybody dealing with anybody who's been aggrieved by the injury doesn't really care whether you're responsible or not. You'll get a lawsuit slapped on your doorstep and have to defend it and prove that you're not responsible, equally as accept with some responsibility. So there is a very huge area, an arena for having a claim made against you, particularly if you've got livestock. We're all aware of the issue with suckler cows and their calves. So the only thing you can really do with that issue in case members of the public get attacked by your cattle is to either fence off the public footpath that might run through the field, which I know isn't particularly practical and it's costly, or put up signage. Now, when I say put up signage, you shouldn't really be putting signage up saying dangerous or beware or anything like that. You should just be giving a description of what is in the field. So purely just a description of cows and their calves, and then the public can make an informed decision about whether they cross that field or not. It's not a get out of jail card. It's not going to necessarily prevent anybody suing you, but it might just help if push comes to shove. There's hundreds of examples I could give you, and the only last thing I want to touch on quickly is personal accident cover, which again we provide as part of our farm package that we offer. You can have personal accident cover for yourselves, that is the partners or directors or sole traders and your employees. And it's really, you have to decide as to whether, in the worst eventuality, if you fell over and were injured in an accident, what plans you would have for the continuation of your business. So what have you got as a contingency plan? Have you got enough members of the family to take up part of your role, or are you really going to need someone in to help share the workload, in which case you're going to have to employ someone and incur costs. So you can cover yourself for various sums per week as an income if you are incapacitated temporarily, and that we offer 24-hour cover. So it's whatever you're doing. You could be off riding your bike at a weekend and fall off and that is equal. It doesn't have to be an accident at work, where you would then get a lump sum if you were permanently injured, or a weekly benefit if you're just temporarily incapacitated, to provide you with an income to potentially employ somebody else. So that's the sort of consideration. You really need to have a look at your business model and decide whether you are going to need extra help if you can't work as a result of an accident, and also just be aware of the GPS situation and the public liability, which I could give you hundreds of examples of, but I'd be here all night. So I think I've probably had my 5 minutes, so I better go. But thank you very much for your attention.
Linda, thank you so much for bringing some of those really important issues to our attention tonight. And anybody who's on tonight's webinar, if you are looking to change your insurance provider, then do give us a call at the TFA, speak to our membership coordinator, Kim, and she will be delighted to give you more information about how you can get a quote from GRP, who are the TFA's insurance affiliates. So thank you, Linda. So I'm going now to invite Charles Callop to bring us his expertise in the area of carbon, biodiversity and net gain, and all of that really important area of natural capital. Please be aware that we are recording tonight's webinar, so it will be available afterwards on the TFA's YouTube channel. So if you don't happen to pick up on everything tonight, don't worry, you will have an opportunity to look at it again. And as I say, please do use the Q&A at the bottom for any questions throughout Charles's presentation, and we'll try and pick up some of those at the end and also harvest them for answering afterwards. So Charles, the floor is yours.
Good evening, anybody. Wise words on the insurance point. Particularly that point about public liability. I couldn't endorse that enough. Natural capital, however, is the topic we turn down. Phrase which has really been grabbing all the headlines recently. Lots of people using it, but does anybody know what it really means? Let's think about the basic idea of capital, because it's a good starting point. All sorts of capitals mentioned: capital, financial capital, social, intellect. What's the basic idea about any of these? Capital is something that we can. We're not careful, we run.
Charles, I do apologise. Your sound is going in and out, I'm afraid. I'm sorry to everybody that's on the webinar. We're going to just try and sort this out, but there seems to be a bit of interference, Charles, in your audio.
I'm going to switch my. That does any better? Is that any better?
That seems to be perfect. Yeah.
Okay, fine. I'll carry on with this microphone. Normally this is the one that works worse, but who knows why that might be. I was just explaining the basic idea of all capitals, that if you're not careful, and you'll know all this from your businesses, you can run down the capital in your business, whether you're measuring that or not, but you can also grow it. Ideally, businesses are growing capital. Capital, of course, can be very valuable, and to an economist anyway, production really cannot happen without capital. So amongst all these capitals, what is natural capital? If you want to boil it down to its most basic, the answer is natural capital is what nature does for us. It feeds us with your help. It clothes us. It provides us with building materials and shelter. It keeps us alive by the carbon cycle, the water cycle, the methane cycle, purification of pollutants and those sorts of things. It refreshes us by, for instance, the pleasure of a walk in the countryside, inspiration for the arts. It keeps us healthy. What are the two biggest health problems facing this country? Vying for position must be the national obesity crisis and the national state of our mental health. It's undoubtedly the case that recreation in the countryside can make a huge contribution to both of those problems. And of course, all those activities like pollination are all also examples of things that nature does for us and therefore come in natural capital. If we'd been talking about this field a few years ago, we probably would have talked about ecosystem services. More jargon, I'm afraid. But actually, ecosystem services are, if you like, the revenues that flow from natural capital. So that's in a nutshell what natural capital is. So how's this going to affect farmers and landowners, whether you're tenants, owner-occupiers or whatever? With Philip and some other colleagues, we've been working on, through our Natural Capital Consortium, on where the potential markets for this will be. And we've illustrated this with this pie chart here. Don't worry about the size of the segments because they're random. It's just an illustration of the different areas where we think there will be potential for natural capital services. Your farm may come in just one of them. It may come in several of them, and you may have the luxury of being able to make a choice between the segments as well. The fact that our presentation this evening is largely addressed at tenant farmers does put some additional complications on the picture, and Philip will be commenting about those later on. But if we start from 12 o'clock round to 1 o'clock, biodiversity and environmental net gain, I'm going to comment about that a little bit more in a moment or two. If we go round to 2 o'clock to about 4 o'clock, we've got carbon accounting and offset. Again, watch out for more in a moment or two. I'll say a bit more about the other segments. From about 4 o'clock to 6 o'clock, we have the valuation of natural capital and accounting for it. Somewhat esoteric, funny money, not real numbers, but nevertheless very, very important. And we can pick up some of that in the discussion afterwards. But suffice to note for now that many companies, not only those listed on the main stock exchanges, but increasingly those above certain turnover thresholds, are going to have to, from now on, account for their effect on nature. And that brings us round to the 6 o'clock to 7 o'clock segment. Because once those companies have to report on these things, it will be more transparent and obvious what they're up to, and they will want to do things about it. So that brings us on to corporate responsibility and how large companies relate to their shareholders and a whole load of others who we might call stakeholders. There could well be opportunities for farmers and land managers in assisting companies in these responsibilities with some of the offsets that they will almost inevitably have to do to reduce their impact. Going around then from 7 o'clock to about 8 o'clock, we've called that conservation covenants. They don't exist in England yet, but they are the child of the Environment Bill, which will become the Environment Act later this year or early next. They are a new type of land management agreement. Tenants, as well as landowners, will be able to make conservation covenants to secure some of the benefits that are elsewhere on this pie chart, and in return for payment in some cases. We move round to about 9 o'clock, and there perhaps is where the main focus of a lot of our interest has been since Brexit and with the introduction of new agricultural policies, ELM schemes and all the rest of it. So the DEFRA and the Welsh Government schemes, and we're starting to see more on those. Round from about 10 o'clock, the dark blue wedge there, site-specific payments, areas that are prone to flooding, areas where new infrastructure is being developed and there's a need to offset its impact. There are some parts of the country where it's now not possible to build new houses and the like until you have come to some arrangement to cancel the additional nitrates and phosphates that will come from the use of the new houses. Again, potential opportunities for farmers in the adaptation of their management approaches and through legal agreements like conservation covenants to secure those types of agreement. Further round, we go to things that we are more familiar with through some of the stewardship schemes, but things like catchment projects for river catchments, landscape scale projects for some of the more scenic areas. And last, from about 11 o'clock to 12 o'clock, the grey area, perhaps the most controversial area really in many ways, the whole area of recreation and access. Now, you're probably already thinking that actually these segments aren't as clear-cut and watertight as my pie chart would indicate. I would have to agree with you, because it may well be that when we look at the new land management schemes from government, there will be an element of paying for access and recreation in them. It is one of the avowed intentions of government support under Section 1 of the Agriculture Act 2020. But we've also got the principle now at play called polluter pays. That's a very nice way of putting regulations getting tougher. Take that applied to footpaths, for example. I'm sure many of you have got footpaths across your farms, and in many cases, I'm sure they're a complete pain. Nobody's going to pay you for keeping those footpaths in the basic legally required condition. But perhaps what we shall see, particularly under some of the higher tier schemes, under ELMS as it progresses, will be payments for extras on those paths, interpretation, additional services, additional parking areas, and those sorts of things, guided walks perhaps. Not to be sneezed at, I'd suggest, not only because there may be funding associated with that, but because in another dimension, it is also a very good way to get closer to our customers. I fear we sometimes forget that in farming and get them to understand our position, but it may also be a way to add value to some of the other things, be that things we're growing or producing on our farms, or that other services that we're able to provide for them that we could offer to a paying public as well. I'll be showing you this diagram again a bit later on because I don't want us to lose sight of the broader picture here, but let's go and have a look at carbon. And I really do think with carbon, because it's been painted as such an evil element because it's warming up the globe, it is really quite useful to go back to school. You know, there is not one of us on this call tonight who is not largely made up of carbon. It's the second most abundant element in the human body after oxygen. And if we look at all the things that carbon has given us, there's about 10 million of them. It's sometimes been called the king of the elements. Diamonds, graphite, graphene, the new wonder material, and of course, it is the carbon cycle that keeps life functioning on Earth. We breathe out carbon dioxide, the plants breathe it in, and they give us back oxygen, and they squirrel away in the form of sequestration, the carbon itself. There it is. That's a reasonably full diagram of the carbon cycle, showing not just the relationship between animals and plants, but also the driver that comes from sunlight and its energy, the industrial emissions, the fact that the oceans themselves are effective in absorbing some of the carbon dioxide in the atmosphere. Carbon dioxide has got a bad name because it is one of the greenhouse gases. The other greenhouse gases are the ones I've listed on the screen here: methane, nitrous oxide, and then a whole bundle of various fluorocarbons and hexafluoride. They're tremendously poisonous, but we don't need to worry about them because they're not so abundant in the atmosphere. Having said that, sulfur hexafluoride used to be used to give tennis balls their bounds. What's their relative strength? Greenhouse gases are measured according to their global warming potential. If CO2 has a value of 1, methane is 25 times more potent, and nitrous oxide 298 times more potent. But of course, they're present in the atmosphere in different amounts of abundance. And because of the abundance of carbon dioxide, that's why it tends to be top of the list. And you will know that farming has taken a lot of stick because of the methane production from grazing livestock in particular. Terribly overstated in my opinion, but we can come back to that in discussion later on. This brings me to the whole idea of carbon footprinting. Very complicated, the idea of carbon footprinting. Do you do it just for your organization? Do you do it for everything below your organization in the supply chain? You do it from birth to death and recycling of everything that you produce from your organization. How broadly do you do this? There is out there comprehensive guidance on how to do these things. If we look at markets for carbon, there are mandatory carbon markets. Until our departure from the European Union, we were part of the emissions trading scheme, the largest carbon market in the world. That meant if that you were a cement producer, a large-scale energy generator, if you operated a metal refining business or any of those really heavy users of energy, you had to report under the emissions trading scheme what your carbon output was every year. And you would be given permits up to a certain level, and above that, you would have to buy others. That was used to fund a clean development mechanism whereby developed countries effectively paid for work in developing countries. One of the shortfalls of that carbon market is that it didn't give you any credit for land management activities. So if you were managing land in such a way that you were sequestering carbon, that was not drawn into your carbon balance sheet. However, the so-called voluntary markets, which means anything outside the emissions trading schemes, have indeed started to develop some carbon pricing. We stand at the moment of a great opportunity in the United Kingdom following Brexit. Brexit is very much a curate's apple, isn't it? Whichever perspective you look at it from. But one of the opportunities is to develop an emissions scheme within the United Kingdom that could give credit for land management activities. So we'll go back to our market segments in a moment, but where does that leave you as farmers in terms of something you could do? I would suggest that something you could do to start getting to grips with this whole area now is looking at your own carbon footprint. Once you start to look out there, you'll find there are quite a few tools to help you do it. We would recommend the Farm Carbon Toolkit, because of the existing toolkits that we've looked at, and we've had a good look, we think it's the one that is most developed in accounting for the sequestration of carbon by vegetation and soil. There's a lot more that could be included. The SAC consulting model does it a little, but not as much. They are working on it, so our preference may change over the next year or two. But for an individual farmer, the Farm Carbon Toolkit is free to use. It involves getting a lot of information together, but essentially you can go to their website, download it, and start playing with it for your farm. If you want to sell carbon, you need to be carbon neutral yourself. In fact, you need to have spare sequestration capacity to sell. So that begins the start of a process of discovery, I'd suggest, for the farm, as to just how carbon rich or how carbon poor you are at the moment. I think some ancillary benefits that would arise from that would also be an examination of actually how we manage our soils, because it's underdeveloped, but actually the capacity of soils, particularly grasslands, to sequester carbon is, in my opinion, distinctly underappreciated. We'll come back to that. Back to our market segments, and again, no apologies for showing you the same slide a second time. It's to remind you that carbon isn't the only segment on this slide, and nor is NELMS. Because now I'm going to have a look at biodiversity gain. Parliament has, over the last year and more, been debating an environment bill. It's very, very wide-ranging, but it will do two things that I want to mention this evening. It will introduce this new type of legal agreement, the Conservation Covenant. You'll find yourselves asking to be party to one of those. But it is also introducing a new standard requirement on all planning permissions in England. And that is that you won't be able to implement your planning permission without demonstrating biodiversity gain. With variations, this has several names. There's Biodiversity Net Gain. There is Environmental Net Gain. The phrase used in the Environment Bill is biodiversity gain, and that's the phrase that I have used on here tonight. Let's have a look at the diagram to show how this works. Here's the development site. Before development, it has a certain biodiversity value. Of course, by developing it, it is likely to fall. So afterwards, it will have a lower biodiversity value. But you've got to show a gain if you're a developer. So there's an offset site somewhere else. That site has a certain biodiversity valuation before. And your purpose as the developer is to show that you will increase that afterwards. And the magic figure is 10%. You have to show that the biodiversity value after your development is 10% higher than it was before. This is for the developer to do. Developers may well be able to do it on land that they own, but in many cases they won't. I'll show you some numbers about that later on. And if they can't, they will be looking for other sites on which to provide the offsets. That may be your farm. That may be a challenge as a tenant farmer, because this biodiversity gain has to be secured legally for 30 years. But I would suggest that where landlord and tenant have a joint interest in earning some money from an arrangement of this sort, then there may well be deals to be done. We can discuss that in matters later on. You may be well wondering, well, that's all very well, Cowup, but how are we to measure these things? And I have good news for you. DEFRA has produced a tool. And whether you agree with the way it does it or not is neither here nor there, because this is how biodiversity value will be measured for these development purposes. It's called the DEFRA Biodiversity Metric. It's currently in its second version. We were promised a third version last December. We're still waiting for it, but I gather it might be appearing in May or June. What is this? This is a very comprehensive spreadsheet that you download from the DEFRA website. You fill in a few details and you work through a process which is illustrated on this slide. This is lifted straight from the spreadsheet. And as my diagram illustrated, you start with the on-site baseline. Then you look at what will be left on the site afterwards, somewhat less normally. Then you look at the off-site baseline. That might be some of the land that you're managing. And then you look at the off-site post-development. You'll see that there seem to be three different coloured lines going across this slide. So it distinguishes area habitats, fields, woods, those sorts of things, from hedge-type habitats, from water habitats, or river as it calls it on here, but it's surprising what fits in there. Basically, you go through this spreadsheet, filling in what sort of habitat you've got. In this little example I've got here, I filled in 10 hectares of cereals and I filled in 10 hectares of modified grassland. The spreadsheet then does the rest, including telling us that the habitat units associated with a hectare of modified grassland and cereal crops are 2 units per hectare. Carrying on with that, if we look at the hedgerow type habitats, here we have 3.5 kilometres of native species rich hedgerow with trees. That description is chosen from a drop-down menu on the thing. We can see that that is worth nearly 80 biodiversity hedgerow units. And when you've done all this, you arrive at a total net change and so on. Again, all working away in the thing. Let me show you an example. This is made up, but it's 500 acres of farmland. There's 160 hectares of cereals. That amounts to 320 biodiversity units. There's some arable merging game bird mix, 10 hectares. That's 40 biodiversity units. There's some temporary grass. That's 46 biodiversity units. And there's 10 hectares of mixed deciduous woodland, 108, nearly 109 biodiversity units. In addition, there's some hedgerow, there's a line of trees. Together, they come to 32.7 hedgerow units. And there's a canal. I chose the canal deliberately because although it talks about river units, you would hardly think a canal would feature there, but it does. 2 kilometres of a canal is 32 river units. And again, is there an action point you can take away from what I'm talking about tonight? It would be get hold of this spreadsheet, start putting what's on your farm into the spreadsheet, see how many biodiversity units you are at the moment. There we are. You have done your offsite baseline. Then start to look at the figures and see what marginal changes you could make that wouldn't really compromise your farming operations, but might enable you to increase the biodiversity units in such a way that you could sell them with your landlord to a developer. And just to underline this, a company called the Environment Bank has looked at a particular site in Cambridgeshire. And they reckon that if they had to divert just 10% of the required biodiversity units on that site, it would cost them an extra £61 million compared with putting that 10% and all the other biodiversity units on a site somewhere else. That does point us in the direction that in some cases there might well be quite big money to play for in these areas. Now, of course, there are additional complications in the way where tenancies are concerned, but where there's a will, there's a way. And this is certainly an area worth exploiting for whatever mutual gains might be achievable by sensible landlords and their sensible tenants. And I bring us back to the market segments. That again, I have only commented on 2 of those. There's much more that we could say about all of the other ones, but I hope my comments have given you a flavour of where we might be going with this. 3 key takeaways for you then from this. Have a look at your own carbon footprint. Have a look at that Farm Carbon Toolkit website. Work out your own biodiversity units using that DEFRA metric. And of course, not something I've commented on, but just really, really do keep an eye on general business health. You know, we really must, at this of all times, be attending to the general health of our farming businesses, examining every cost, every market to see that we are functioning as financially efficiently as we possibly can. There are still huge differences between the best and the rest in farming. I think that really concludes what I have to say today. And at that point, I think it's probably better if I hand over to Philip for his comments now, particularly on the landlord tenant aspect of it, and we can pick up questions and discussion later on. Philip, over to you.
Thank you, Charles. I'm going to get some feedback. Bit of feedback on my oh, that's better. I can hear. Yes, I often have the pleasure of following Charles on the stage, and he's a difficult chap to follow, and today is no different. My slides are, if we can just click onto the first one, Charles. I think because Charles you've got control, Charles. That's it. Yeah, my slides are slightly less glamorous than Charles, and they're more of an aid memoir for me than anything more than that. I mean, my sort of remit or subject this evening is managing the landlord and tenant relationship with regards to natural capital opportunities, and Charles has very ably taken us through a long list of potential natural capital opportunities that are available to landowners, tenant farmers and land managers throughout the UK. But he's also alluded quite rightly to the limitations and the restrictions that as tenant farmers you may find you have when trying to capitalise on the natural capital assets on your farm as a tenant farmer, because one of the big misconceptions, I think, about natural capital that we as a natural capital consortium come across all the time. We were talking to HSBC Bank earlier today, and they were of the same sort of misconception, is that natural capital and benefiting from natural capital and carbon offsetting and biodiversity is all about planting trees and doing long-term commitments to things that maybe tenant farmers wouldn't have access to because they have annual tenancies or relatively short-term stewardship of the farms that they farm. But that, I think, is not necessarily true, particularly if you have a good landlord-tenant relationship that you're prepared to work on. And even if you have a fractious relationship, there are still opportunities out there to be had. Just touching on some of the ones and reiterating what Charles has said: carbon offsetting, carbon sequestration, biodiversity, and third-party access are some of the opportunities, I think, if looked into carefully, tenant farmers, even on the sort of shorter-term tenancies, are able to benefit from. Bearing in mind that tenancies under the Agricultural Holdings Act are actually only 12-month tenancies. So if you have an investor, and we're, as the Natural Capital Consortium, talking to some fairly big industrial partners who would be looking for probably 20 or 30-year contracts, then obviously a tenant with a 1 year or potentially only a 1 year tenancy that rolls on from year to year is not going to be of interest to these big investors. But that's not to say that there aren't opportunities for people with day-to-day farming operations in carbon offsetting, with biodiversity, with third-party access. The sort of thing we're talking about would be, for example, managing or changing the crops that you grow. A typical example we give is that switching from growing winter wheat to spring oats actually reduces the carbon footprint of a farm by between 2 and 3 tons of carbon per hectare per year. Now, obviously, spring oats are not as profitable as winter wheat in many senses, but if there is a local business that is prepared to pay you to grow spring oats instead of winter wheat and then take the credit for that carbon offset, then there is an opportunity for a relatively short-term contract that you might sign up to for only 12 months. You've got to bear in mind that we're not talking about necessarily big steel manufacturers or energy producers. You could certainly, in the not too distant future, be talking about on the voluntary carbon market, individuals. The Greta Thunberg generation, who are very conscious about their carbon footprint, are far more likely to pay to offset their carbon than perhaps people of my generation. So you might have a 25-year-old somewhere who wants to fly to New York for the weekend but feels guilty about it and wants to go and pay a farmer or a landowner for a bit of carbon offsetting to offset their conscience about the fact that they've just flown to New York. That could be done by planting a tree. It could also be done by paying a farmer to grow some different crops or some minimum tillage of a field for harvesting. So it's not necessarily all about planting trees and growing big hedgerows and rewilding, which is the big scaremongering sort of story that puts a lot of the farming unions off, about the idea of the whole of the country becoming a sort of Disneyfied version of itself. So there are definitely opportunities. If we can just switch to the next slide, please, Charles. So what do you do as tenant if you're thinking about carbon opportunities and biodiversity opportunities? Well, you will clearly be limited by the terms of your tenancy agreement. There's no denying that. Tenancy agreement will stipulate what you can and can't do, and that must really be the first port of call. And if you're not comfortable about understanding what the document means in some sense, then there's plenty of help from people like ourselves, through the Tenant Farmers Association, agents, who are all perfectly capable of giving a bit of advice, a lot of it free advice. We're very happy to talk to people over the phone about what your tenancy agreement means. And there are, of course, any number of varieties of different types of tenancies, but they broadly fall into 2 categories: AHA, in other words, the Agricultural Holdings Act, and FBT, Farm Business Tenancies under the Agricultural Tenancies Act. And they will have their own limitations. And in some ways, a 30-year farm business tenancy might actually be more amenable to a carbon or biodiverse contract than an AHA, which is on technically on a 12-month rolling term. Sometimes you will have oral agreements. There's plenty of them out there still, but usually it'll be a written agreement, and the written agreement is the place to start. The sort of things you've got to look out for in both AHA and FBTs will be things like the user clauses. The user clause will typically say that you can only use the farm for agricultural purposes. If there is a strict user clause in your tenancy agreement, then growing of trees is probably going to be out, unless, and we'll come to sort of the few minor exceptions where growing of trees might still be deemed to be agriculture, but growing of trees, for example, turning over the whole of the farm to rewilding, not growing crops for food, etc., will not usually be within the user clause in the tenancy agreement. Alienation clauses, we talked about third-party access. One example we came across in our work as the Natural Capital Consortium was doctor's surgery, paying a local farmer to convert a 5-acre block of woodland into an area for reflection, so that the local doctor's surgery would pay the farmer for the right for their patients to come and sit in the woodlands. The farmer basically agreed to maintain the woodlands, cut a few paths into it, put a couple of benches and plant a few wildflowers, etc., to give that sort of area of relaxation for which the local doctor's surgery is prepared to pay for. Now, that, depending on the way that that agreement would be written, wouldn't necessarily be in breach of what we call the alienation clause. And the alienation clause, typically in a tenancy agreement, is the one that starts along the lines of not to assign, sublet, or part with possession of. And these clauses can sometimes be only 2 or 3 lines long. Sometimes they go on for several pages. But you do need to look at the alienation clause, the clause that says you can't sublet, part with possession, etc. Because allowing the local doctor's surgery to pay you to have someone to come along and sit on a bench is not necessarily, and probably won't be in breach of the alienation clause. It may be in breach of the user clause because it's not agriculture, but you won't be subletting by doing something like that. So don't necessarily be scared about looking into these sort of opportunities. Rules of good husbandry is implied into virtually every Agricultural Holdings Act tenancy agreement, because if you don't comply with the rules of good husbandry, you could end up with a certificate of bad husbandry and get a notice to quit following a hearing in front of the Agricultural Land Tribunal. Rules of good husbandry are very often written into, they're not explicitly in the farm business tenancies, but they're often written into farm business tenancies. You'll see clauses in the schedules at the back of many of them saying that the farmer or the tenant will comply with the rules of good husbandry as set out in the 1947 Agriculture Act. The problem with the rules of good husbandry is that rewilding, going back to rewilding, which is to say the big sort of misnomer in many ways, but things like rewilding, where you allow nature to take back large areas of your farm, would not be in compliance with the rules of good husbandry, and you would be at risk of being in breach of your tenancy agreement. So there are a number of things you have to be very careful of with tenanted farms, but that's not to say that all natural capital opportunities are completely written off for you. We go to the next slide, please, Charles. So what should you do if you're thinking about, if you've listened to Charles this evening and thinking, well, maybe this is something we should look further into? Well, we would always say that engage and involve your landlord if possible. It's far easier if you work with the landlord than trying to work against him, because if you're constantly looking over your shoulder and worrying about whether you're in breach of the tenancy agreement and the landlord's constantly looking for some way to catch you out and serve you with a notice to roam, your notice to quit, then it's going to be very hard to get any long-term investors or natural capital investors interested in partnering up with you as a tenant. So do engage and involve with the landlord if possible. If that's not possible, I say there are still opportunities, but they may be more limited than working with the landlord on this. Rent, what do you do about the rent? Well, yes, I think my view really is if the landlord is prepared to work with you and perhaps put some significant capital expenditure into a project with you, then understandably the landlord would want a return on that capital, and that would normally be in the form of an extra rent. But if you're doing all the investment and the hard work in getting a natural capital opportunity on the farm, in order to replace what is being lost under things like the BPS, for example, the question really, certainly under the Agricultural Holdings Act, is has the production related earning capacity of the farm increased? If the BPS has gone down by 50% and you're just replacing that with an opportunity to partner up with your local doctor's surgery, as mentioned earlier on, then if the overall production related earning capacity of the farm has not really changed, then is there, just because you're making a bit of money in a different way, is that an excuse to put the rent up? I think the answer is, well, every answer is going to be different on every case, but I think generally the answer is probably no. If you're just trying to replace the income you're losing from BPS and coming out of the Common Agricultural Policy, then there's probably little reason to expect significant rent increases unless the landlord is making significant capital inputs as well. Effect on long-term flexibility. succession, that sort of thing. Obviously, if you are going to plant trees on the farm, and as I say, I don't want that to be the red herring that puts everybody off, but if you are planting long-term crops, then that does affect the flexibility for the farm going forward. You've got to look at the impact it has on succession, because obviously the way succession stands at the moment is it's got to be the applicant under the Agricultural Holdings Act has got to have earned his or her income from their agricultural work on the holding. If the farm becomes hugely diversified and there is little agriculture involved, then that could have an effect on a future succession application. Although there is, of course, provision in recent legislative change for a landlord to agree to diversification not having an impact on succession, although the reality is that very few landlords will actually agree to that because they know that it may impact on their ability to stop a succession taking place. So do take that into account if you are getting involved in medium to short-term contracts for natural capital anyway. I think that's the last of my slides, Charles. Oh no, that's right, new tenancies was the one other thing I was going to touch on. We are seeing an increasing number of new clauses are turning up, particularly in farm business tenancies, referring or reserving natural capital, etc., to the landlord. So beware of those. I've done some work with 2 landlords agents. I understand, so perhaps not surprisingly, they're relatively small sole practitioners who have very sort of close personal relationships with their landlord clients, and therefore are perhaps a little bit more flexible than some of the larger estates. But they've been very open to the idea of landlord and tenants working together. And when we've been through the standard RICS or CAV farm business tenancy with these sort of clauses in them, have agreed to modify them and in some cases strike them out. Entitlement clauses, these are going to die a natural death, I think, anyway, as BPS fades out. But just beware of these, because a lot of those clauses do insist on the tenant, certainly in the new agreements, using phrases like best endeavours and maximising entitlements on the farm and maximising eligible areas. Be very wary of these, because if we're going forward into a new era where maximising this and maximising farm production, maximising entitlements is not necessarily the most viable business prospect going forward, then you don't necessarily want to sign a tenancy agreement that forces you as tenant to use your best endeavours to maximise entitlements, which may not actually be the best business model for you. And again, proactive landlords agents that I've raised these points with, who have just, as many do, just print these standard agreements off from the CAV RICS website and send them out expecting the tenant to sign them. As soon as you raise these points as valid points and say, hang on a minute, have you actually thought about that clause when you put it in? I found very, very good response, and they've sort of scratched their heads and thought, well, no, actually, you're right. We'd like to work with the tenant on these sort of opportunities that are coming, because of course, if you're going to restrict the tenant to just growing intensive winter wheat for the rest of his natural life, then that will have an impact on the productivity and the profitability of the farm going forward, which will have an impact on the rent, which is actually what it's all about for the landlord. So it does work in both parties' favours to be flexible and to look at these opportunities and to work together on them. And that really, I think, would be my abiding message, is that just because you're a tenant on a farm does not mean to say that you don't have any opportunities with biodiversity and natural capital carbon credits. Check your tenancy agreement, and if you can work with your landlord, then that would be the best way to progress. But if you can't, then there are still opportunities for you. And that really sums up my presentation. Thank you, Mr. Chairman.
Brilliant, Philip. Well, both of you, Charles and Philip, that's been absolutely fascinating. I'll just apologise for not being there at the start, but I got most of it being presented, and thanks, George, for stepping in. It's unusual for us to have IT issues. Obviously, we've got a very small amount of time for questions and answers, but I think it was really important this evening to just hear both of those presentations absolutely in their full, because I think this is clearly an area where it's going to become a real live thing over the next well, it's becoming live even now, clearly, from what you're saying, and you've both given us some really good things that we need to go away and do, like measure our carbon footprint and our biodiversity unit, and check our tenancy agreement and that kind of thing. So that's been fantastic. I'm going to just ask one question initially, and it may take us to time. But Stephen Bumstead has asked, and I suspect this is something that a lot of people would ask, and I think you've sort of answered it, but you perhaps could be clear. Who do you think has the title and who owns the carbon credits? And if they're tradable, how will they trade in a landlord-tenant relationship, do you think?
It's incredibly broad and open, Mark, just at this stage, because if we're talking about carbon credits, first of all, do we have any surplus carbon to sell? So it's only if you've got spare carbon to sell that you can even start talking about carbon credits. Next, where is that spare carbon to be found? Let's take a typical tenancy agreement where the landlord has reserved the timber. If the carbon is in the timber, it's very probably the landlord's. However, if the carbon is in the soil, it seems to me that both parties have a vested interest in it. The landlord owns the soil, but it is the tenant's management of the soil that makes sure that there is carbon to sell. And the landlord can't really sell the carbon without the tenant's management input, and the tenant can't really have any recognition for that without the landlord selling the carbon. Now, that's just a couple of examples, and there would be other things all over the place. Philip mentioned the importance of looking at the terms of new tenancy agreements, and it's the sort of thing that actually, you know, new tenancy agreements might start to make clauses for. But you do come back to the fact that land management requires that husbandry input. Now, some landlords may be in a position to provide that husbandry input because they have the skill or they're happy to engage other people to do it. But there still must be a place here for a relationship between actual land managers like tenants who can do that management work very, very cost effectively because they're able to make money from elsewhere in the farm. Now, I know in saying that, at a TFA meeting, I'm preaching to the converted. And I know that I'm also counselling perfection in terms of the attitudes that are brought to bear by landlords and tenants in these matters. But there seems no harm in starting with that as the kind of position that we want to work towards. So in other words, the landlord is unlikely to be able to give the assurances about the management of the carbon without the involvement of the tenant. And the tenant really can't make anything out of it very much in a lot of cases without the landlord taking the initiative in selling the carbon in whatever asset there is. I'd like to get a really clear-cut, well-defined answer, but at this stage, I don't think it gets much more precise than what I've said.
No,
I think what's also important, Mark, is to realise that carbon credits aren't going to be a market like milk quota, for example, where one person provides a milk quota, like the old the RPA, and say that you will have a milk quota of 1 million litres and you can sell your milk quota. A carbon credit is a bit of a misnomer because what we're looking at is individual contracts between landowners and individual industry businesses. So you might have a contract with a massive producer like Tata Steel or someone like that who sets up a project where they want to bring in any number of farmers to offset some of their carbon. So you would have a Tata Steel carbon credit that might be available to farmers in South Wales. On the other hand, you might have a local business that's producing some sort of pollution that wants to up its green credentials. ABC Limited from Telford, who wants to engage with the local farmers in and around Telford to offset some of its carbon. So we're not going to have we probably will at some stage, but in its early stages, I think we're going to see a carbon market sort of evolving from local industry and larger industry wanting to engage with local farmers and larger farmers. So you won't have a sort of a national carbon credit to start with. I mean, that's not to say in 10, 20 years we won't, because I think we all believe that if we're going to reach carbon net zero at some time in the future, we might, even as individuals, wake up on the 1st of January each year with a carbon credit card and 10,000 units that you can use, like the old ration books after World War II. If you want to fly to America, you have to use 1,000 of those credits. And when you run out of credits, if you want to fly to America, you have to go and buy some more. But that's a long way down the road. I think what we're looking at now is individual contracts between farmers and industry, small and large, that will create their own individual contracts and set their own prices. And I think it's far more complex, but far more exciting than just some sort of national carbon credit scheme at this stage.
Right. Okay. Interesting. Yeah. I mean, I think from both of those answers, it's clear that it's a sort of watch this space. It's developing, you know, in its own way, but it's very important that we as tenants are sort of engaged in that. I think that's one of the things I'm really picking up from this evening. I don't know if you guys are okay to hang around for another, say, 5 or 10 minutes or so. We thought we might just run for another 10 minutes. I'm always conscious with these, we all get a bit sick of Zoom and whatever, and there's a certain attention span, but I think the topic's interesting enough, and we've still got quite a few people online. So I'll fire another couple of questions if I might. Philip, I think this is one a little bit for you. Robin Waters asks that, could a landlord, in conjunction with a developer, get back an 86 Act farm by putting the farm into a planning application for carbon offset? Is there a risk of that kind of thing happening, do you believe?
Well, I guess anything that requires planning permission, if the landlord then gets that planning permission for what is essentially non-agricultural purpose, then yes, that is a risk. I think carbon offsetting, if the carbon offsetting is going to be done by means of agriculture, whether it's sort of growing different crops or whether it's, you know, going from growing ryegrass to growing meadow grass, then you're still within the room. You're still within agriculture. So I think you know, you wouldn't be able to serve a case B notice to quit on that basis. I'm not aware at the moment of any carbon proposals or carbon offsetting proposals that will require planning permission. Right. It seems a bit of an unusual sort of beast, that. So, I mean, you can never say never, but certainly nothing from the work that we've done as a Natural Capital Consortium is indicating that you'd need planning permission for carbon offsetting, because that's just going to be another hurdle to keeping us away from carbon net zero. And I can't see the government wanting to get involved in drawing a line around these things and saying, well, if you want to do carbon offsetting, you're going to have to get planning permission. That's not to say they won't, but at the moment, the sort of things we're talking about is continuing with agriculture. Now, planting trees is a classic one, I suppose. You know, if you're going out of agriculture and if you need planning to plant a new forest or something, that could be an issue. But at the moment, I don't see that as a threat. No, the bigger threat is in the same way that we've seen farm business tenancies start to dwindle because landlords are looking at the tax position and wanting to, on paper, farm themselves for business property relief. I can see that as a threat because landlords want natural capital as a significant way of making money and won't want a tenant farmer there. So they'll just go into a contract farming arrangement or some sort of arrangement where they don't actually have to put their wellies on. The tenant becomes a tenant by a non-tenant by any tenant, but by any other name, not a tenant. And the landlord then reaps the natural capital. That's the risk. That's more of a risk than a landlord under an 86 Act tenancy taking land back under case B.
The other thing that might play out there, Mark, is not so much carbon, but biodiversity gain, because one thing that developers will be weighing up in the future is, do you draw the red line around your development site for planning permission just on the site that you hope to get permission on? Or do you draw it around a wider area, which includes your biodiversity gain obligation? Now, there's probably a lot of good reasons for keeping that red line tight and going for off-site matters. But essentially, if you draw a wider red line, which is around some of the farmland, that's land for which planning permission has been granted for development, albeit that what's going to happen is not actually the bricks and mortar development. So there's a watching brief. There's a watching brief on that aspect of it. And just as this is a bit of a moving jigsaw for farmers and land managers, it's actually a moving jigsaw for developers as well. Those things who don't seem quite aware that this is going to hit them in a year or two.
Yeah. Yeah, you've obviously been reading the chat, Charles, because there was a little bit about that further down one of the questions. So you've jumped ahead. Thank you.
Oh, have I? Right. Well, I hadn't, as it happened. Oh, good. Excellent.
That's good. I'm just going to fire one last question that comes from Dennis Masterson, who's our chair in Wales. Going back to the tree thing, Philip, a little bit. And it's a little bit, well, it's not specific, but it is specific in a way. So if a tenant planted a row of willow with crops between them and coppers the willow every 3 years for use for wood chip, for bedding or whatever, would this be still classed as agricultural under the 47 Agricultural Act? And therefore, would that circumvent the need to obtain landlord's permission? I guess that's a little bit on your tree answer as well, just now.
Yeah, I mean, I thought about, I mean, my initial reaction to that was no, because I think agriculture includes, and I'm just quoting this now, horticulture, fruit growing, seed growing, dairy farming, livestock breeding, and the keeping, the use of land as grazing, meadow land, osier land, which Charles informs me is actually willows, market gardens and nursery grounds, and the use of land for woodlands, where that land is ancillary to the farming of land for other agricultural purposes. So I think Dennis is picking up on that, where if trees are being grown for a use that is ancillary to farming, so chopping down the willow and using it as bedding, then potentially that is agriculture under the definition of the 47 Act, and therefore would that be a problem? Would it circumvent the need for landlords to obtain landlord's permission? I think possibly under the 86 Act, the answer to that would be no. I think you'll find that under modern FBTs, there's usually a clause saying that the tenant won't grow a crop that's more than 12 months in duration. So you can't go and grow elephant grass for going into a CHP sort of a burner, and you can't plant coppicing willows. So I think under FBTs, it's not necessarily the fact that it'll be restricted under the definition of agriculture, but it may well be restricted under the terms of the tenancy agreement. And I think, again, then there will be clauses in AHA tenancy agreements that will restrict that. So in answer to Dennis's question, I think the way he's worded the question was specifically to fall within the definition of the 47 Act. And in answer directly to that question, he wouldn't need landlord's consent if he's purely relying on the fact that he's just carrying on with agriculture. But that's not to say you shouldn't look at the tenancy agreement, because it's an FBT. You'll find there's probably a limitation on growing crops more than 12 months in duration. And there will be AHA tenancies out there which you could fall foul of as well. So don't just think, oh, well, it falls within the 47 definition of agriculture, I can go and do it. Check your tenancy agreement, speak to TFA, speak to someone like me before you do it and end up with a notice to remedy or notice to quit.
Yeah. Okay, thank you. Thank you. Well, we've already used up our extra 10 minutes. I suspect we could carry on with this for most of the evening and beyond probably. And I suspect we'll come back to this, in a few months, in a few years probably to revisit it. So we have got quite a number of questions. I think we'll try and pull some of those together and maybe whiz them over to you if you do have a spare 5 minutes, which I'm sure neither of you have, but if you did, you could, and we'll pop those back on the website. But I think just enough for me to say thank you both very much for your contributions this evening. I think this is a real live area, and I guess the one thing that I really take away from this is that it does present actually a huge opportunity for landlords and tenants to start collaborating in a really constructive manner, because this actually is an area, it seems to me, that us as tenants and landlords as landowners can really maximise the amount of return they can get from the land by being sensible and collaborative about it, and may well miss opportunities in the bigger scheme, not making the best of these opportunities that are out there. There's clearly a lot to look at, there's clearly a lot to do, but I think it would be a real shame if, as an industry, between landlords and tenants, we miss the opportunity to both maximise our productive food production as well as maximise our environmental benefit for the biggest return of income that we can get by the two parties working well together. And I suspect that's something that agents and the landlord community and us as tenants really need to get our head around sooner rather than later. And yes, rewilding is the name of the game at the moment, but perhaps spend a little bit less time worrying about that and a bit more time thinking how we can collaborate, you know, to make things work. So that's really good. The other thing, obviously, we take away is the jobs that we need to go and do in terms of our carbon footprint and see whether we have actually got anything to sell at all, because we might be we've got no free carbon at all at the minute. So the starting point might be to look at our farming practices to see what we can do to get to that point. And as ever, keeping an eye on our business health is really important, and part of that, I guess, is looking at your tenancy agreement. So thank you both very much for that. It's been absolutely fascinating. I've learned a lot this evening. I was a bit concerned when I spoke to George earlier that if there weren't many questions and it was going to be down to me, it wasn't an area I knew enough about. So you might end up with some very basic questions, but I feel a little bit more informed tonight. So thank you very much. And also thanks to Linda, as ever, who joined earlier, and that was, as ever, useful. Insurance is to keep an eye on. So thank you, Linda, again for coming and giving your short piece, much valued. And thank you to everybody for attending this evening. We are continuing to run these. Our next one next month will be how tenant farmers deal with access, with public access. And it was interesting to hear Charles's comment on public access, actually, and where that fits into all of this, because that's something that I hadn't really figured in with the carbon and biodiversity and everything. But that's a really interesting point. So maybe we'll come back to that as well. I don't think we have a date for that actually next month, do we? Julia would have told me that, but anyway, it's in April, so watch this space. It'll be on the e-newsletter. You'll get emails about it. Thanks very much for attending. Sorry we've overrun, but I think it was worth doing that. So thank you both again, and we look forward to hearing more on the subjects as we go forward.